Well, the Fed just released the minutes yesterday, and it looks like rate cuts are on the horizon, baby. So is this good? Is this bad? We're going to talk about it in this video, and we're going to see where this is, and then I'm going to tell you about something that I've heard and read that might not be so good in real estate that's going to cost you big time. So let's go over the meeting minutes first, and for that, I got a video of explaining it. Somebody explaining it as a video, and let's watch it.
So we just got the Fed minutes, and there's several hints for a rate cut at the next meeting in September. For those who don't know, the Fed minutes is a document that comes 3 weeks after every Fed meeting and gives us more details about what was said behind closed doors, and this time, it's very juicy. I'm not going to waste your time, so let's get straight into it. First, and this might be the biggest point in my opinion, the vast majority of Fed members said that if the data continues to be good, they would likely cut at the next Fed meeting. In other words, they will lower the interest rates in September unless inflation rises. We've also learned that several meeting participants wanted a 25 basis point cut at the July meeting because they felt the inflation data was good enough and the job data was becoming worse. In fact, the majority of participants agreed to say that unemployment risks are rising, and some reported that payroll gains might be overstated. Coincidentally, we just got the NFP numbers revised down by a total of 818,000 for the 12-month period ending in March 2024 this morning. This is the largest revision since 2009, but back to the minutes, the Fed members also mentioned that cutting too late could weaken the economy. The bottom line is we will very likely get the first interest rate cut in September.
Okay, looks like we're going to get a rate cut in September, 25 to 50 and basis points, because the economy is in shambles. We are laying people off. They're over exaggerating the numbers by 30+%, and we're just keep trying to chug along. We're basically on life support, and they're like, yeah, we're going to try and, see what the numbers say, blah, 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 blah. And it is just really bad, really, really bad, actually. But now listen to this. So a lot of commercial loans are going to be due up for renewal because they're 5, 6, 7, 8 years, whatever you want, when you made them fixed for so many times, and then they come up for renewal, right? That's kind of how these work. And then you have a balloon payment or you refinance, and you kind of get all that kind of stuff done, right? And so what I've heard is that there's a bunch of Wall Street investors that look at, buying commercial real estate, buying multifamily houses, doing all these kind of things, right? And so all these numbers for loans, for mortgages, most of them are public record, right? And so what I've seen and what I've heard is that if on this street, there's a Wall Street investor renting out units, and on this side, there's a smaller company that's also renting out units. They're both remodeled. They're both the same price. Wall Street is now renting out these units for $2,900. This other guy over here is renting them out for $3,200, right? And so what this Wall Street guy is going to do is going to wait till this person over here has to refinance in December and has to jack up the rent because they have ongoing costs that are higher and higher. So what Wall Street's going to do is they're actually going to lower the rent. So this guy has to up it from 3,200 to whatever it is, or 2,300 to whatever it is. And Wall Street over here is going to lower him. So this is going to drive this guy out of business, right? And so then Wall Street over here is going to say, haha, you're not going to get that. And whatever it is, $2,800, whatever it is, Wall Street's going to then lower it. So there's no customers, no renters over here till this guy defaults. Then Wall Street over here is going to buy this guy and going to actually buy it at a discount and then jack both rents up. So short-term relief, but long-term pain. And this is how you play if you're in the big boy house. This is how you play when it comes to big money. This is how it goes when you play on Wall Street. These are the games that they play. They say, hey, we drive our next door neighbor out of business because we can take a 2-year loss and then cause that guy to go out of business. And then after that 2 years, you're going to see that, hey, he's out of business. He's at a 50% occupancy or 30%, and then we're going to get him out. Then we're going to just buy him up at a huge devaluation, because real estate is, is valued based off of the rental income. And if that's going to take a huge hit because you are actually taking all his customers, then you're like, hey, fair and game. And then you buy both of them up, and then you jack them both back up again. And in states in Florida, like Florida, that have not really rent control laws, right? Where they can do that. And, like, your lease is up for renewal, so we're just going to jack them up. They can do that. They can do that. And it's going to cost you and me more money in the long term, right? But hey, these are the games that they're playing. And, if interest rates are going to come down a little bit, it's going to fairn it out for, for these other two people. Because let's face it, Wall Street, these Wall Street investors, they're not going to be hurting too much. They can stop trading. You saw it with Reddit, you saw it with, AMC. They can just tell Robinhood to stop trading, to halt trading, because they can they have that power, and there's no investigation, there's nothing. And they should be actually investigated, because that is actually really criminal. But it's Wall Street. They bribe politicians, they pay them, they'll campaign fund them. So there is no problem with doing all these things. So that is a huge thing why I want these rate cuts to happen, because it's going to even it out for most people. It's going to, relieve a little stress for most consumers, right? It's just going to take a nip off. We're not talking about threes or fours, threes in the low threes, twos again. We're just going to talk about just a little nip to get people actually some fresh air, to just keep investing and doing the right thing. But man, I'm telling you, these Wall Street investors are absolutely crazy. They're gonna come for your money. If there's blood in the water, those are sharks, and they're coming after you. So this is just another thing where these rate cuts are gonna come in semi-handy to keep competition afloat, right? Because if you eliminate all the competition, then there's only gonna be the big dogs, and big dogs don't care about you. But when there's competition, they need to watch out, because that can happen to them too. If they have billions of dollars of assets on the line, right? And all of them are defaulting, then all of a sudden it creates a domino effect, right? And that's what they want to not have happened, right? They don't want that to happen, right? And it is just absolutely crazy, because my speculation was that with Salesforce, right? State Street, BlackRock own huge part of Salesforce. Salesforce paying $2 billion in rent. And they said, we cannot forego that $2 billion in rent when you have work everybody from home, right? So you got to come back into the office so we can get that rent money, right? And that is how these sharks play. It is no fun. It is brutal out there. And people do not understand that, oh, I got a $200 rent decrease this year and another one next year. Yeah, but you're going to pay triple as soon as your next door neighbor's going to get out of, competition. It's going to default. And people are like, oh, most of these landlords are, mom and pop shops. Those are smaller single family homes. These are not in big cities, right? These skyscrapers that you see in Brickell, in Miami, New York, most of them are Wall Street, right? If you want to live in San Francisco, a lot of them are huge investors. And they're not these small mom and pop shops as you would think out here, where, I can own a duplex for a few $100,000, right? I'm not a Wall Street investor. But if there's going to be huge construction projects going up, like you see in Las Vegas, that's what they're going to do. They're going to compete against each other and trying to put themselves, put the other guy out of, business. And you cannot compete with Wall Street. As a landlord, even if you have millions, you cannot compete with these guys, because they don't care if they take a loss on one or two of their properties. It's just not gonna happen. It's just not, they don't care. If they do it for 5-6 years till interest rates renew and it didn't put in a fixed rate, you're done. You're done. And I bet you those guys knew what's coming. Do not tell me that, you know, that Jamie Dimon and all these CEOs didn't talk and make their loans fixed, right? Because the music at one point is gonna stop, and it did, right? So now what does that mean for you? Well, that means you're gonna get a little short-term relief, right? Before longer term pain. So what do? You invest. You need to invest that spread of of decrease and make something smart out of it. Don't go out and buy a $200 a month extra in car. Don't go and do that. It's like, I could now, instead of buying this Toyota, I can buy a Beamer. Don't do that. Stay with what you got, live with your means, and actually then use that money to kind of invest and hope that in 3 to 4 years, compound interest really going to kind of take off and help you out, because that is going to be the only thing that can help you retire. And I'm seeing that a lot in my comment section, that people are struggling to retire. And these Wall Street people don't give a shit if you're going to retire. And if you're making enough money, compound interest really going to help. And if you're not making a lot, even then compound interest is going to help. Not as much, but a dollar made on compound interest is easier made than actually going out and working for it, right? So just some word of advice of actually, you trying to make it last and trying to save some money, and rather join, if you can't beat him, join him. And I've been hearing a lot of these people like, I don't want to do any of that. I just want to, get out of the rat race. That's how you get out of the rat race. You got to play to win. And when you win, you then get out. It's not that you need to play for an infinite amount of time. You just play to win and then get out. And so you make a few strategic moves and then you kind of get out. And, you just hedge your bets, right? You hedge your bets. You just make sure that your money is invested into something that appreciates, that maybe pays you dividends, and have a diverse portfolio. Just like Warren Buffett, he owns a bunch of different stocks in a bunch of different sectors. So there's always something that's winning, right? Regardless of market conditions. And don't ask me what you should invest into. Do your own research or just copy what Warren Buffett does. Seems like he knows what he's doing. And stuff like that always fascinated me. When I'm talking to Americans, then they're like, we're doing this, we're doing that, gotta buy new plants in the yard, gonna do all this, I need a new car. You need to invest. You need to get yourself an a stockbroker or something, like Fidelity, what do you call it? One of these financial advisors that they'll just give you when you open up an account. You put it in there and you just keep on putting money into that account that kind of grows. Slow and steady wins the race. Don't do what I did and try to, make money with with bets that, can make you tens of thousands of dollars overnight and then back to zero. That's what I did, right? I did penny stocks and freaking took off. I think $3,000-4,000 went to about 50, 60, and then it went back to 500. So I actually lost money because I was like, it's gonna keep going, it's gonna keep going. And nope, sure enough, the music stopped and I wasn't prepared. And I was looking, I was like, oh my gosh, oh my gosh. And then, it went back down. It's like, oh my gosh, no, no, no. So yeah, this is how these cycles work. But you just got to be smarter and let some professional do it and just keep putting money in, keep putting money in. There's a lot of great YouTube channels that tell you how to get dividend stocks and how to make money on all these type of different things so you can keep on growing slow and steady, right? And yeah, I'm just like, man, for all these people that messaged me and said they're facing financial struggles now, man, I feel you. It's just not great when you're looking at getting laid off, having high credit card debt, and you're like drowning, and you're drowning in debt, you're drowning in in headaches at night, you can't sleep good, because I've been there. I've been there. And you're like, oh my gosh, is this going to work out? Is this going to work out? Because I had a failing business, and I was during COVID and I couldn't sleep at night. I was like, oh my gosh, I couldn't qualify for anything and they shut me down, wasn't even self-inflicted. And I was there where it's like, oh my gosh, I got to put it on a credit card because I don't know how I'm going to pay for this and all that. And it's just like, it just wasn't good. And then you just got to work through it. And I'm telling you, sleeping good at night, not knowing that you have to, you have to, rely upon that money. It's just kind of working for you. You're good. You're good. But it takes discipline. And I did not have the discipline before. Now I do. Now I just put it in Fidelity and they kind of invested for me and I just let it be. But yeah, it is absolutely tragic when you see all these people struggling. And now a little bit with these interest rates cuts, gonna give a little bit of a breathing room so you guys don't have to pay 29% interest on a used car, right? That CarMax had 22%. And then I've got some comments from some super smart people basically saying, oh, why is this guy doing videos? We should have a mechanic doing these things. And I was like, that is what's wrong with America. Because you're a mechanic, how do you know anything about finances? You need to look at somebody that has done it, that has success in investing in finance. Not um, not because he's a mechanic does he have to know anything about how to invest and actually retire. That's why you have to ask a retired person, how did he do it? Don't ask somebody in their 70s and 80s, how do you retire while they're still working? Because that's not a good trajectory, right? Because if you're not there, don't ask for advice that's to a person that's not there. So if you want to be a doctor, don't ask somebody that's not a doctor how to become a doctor. They have no idea. Go ask the doctor, hey, how do you become a doctor? Or ask some career advisor or somebody else, at the college, like, how do you become there? That's their job to actually know this kind of stuff, not just some, hey, ask a mechanic on how to finance a car. How does he know? He might know how to change a head gasket or change a tire or or change some modules on it. But that's what you got to do. You got to listen to the right people. And when you don't listen to the right people, then you're doomed to start, right? And don't listen to what I say, because this is just one opinion out of 100,000 on YouTube, right? I'm just a small little creator, and I'm always telling you, listen to market makers. Don't listen to my stupid ass. Listen to somebody that has that makes markets, like Warren Buffett. Listen to when the big people talk, when the people with real money talk. Listen to what they're doing, and then you kind of come up with your own strategy and see, hey, if Warren Buffett is buying Apple stock, maybe I should do that too, because maybe he sees something that I don't. And, that's the problem with most people. They're like, oh, that's stupid. I'm not going to do that. You should, because the likelihood of him, risking hundreds of millions of dollars is way, way bigger, of him making his due diligence is way, way more than you are investing $5,000, right? When you're having hundreds of millions of dollars on the line, they're going to do their due diligence like crazy, right? So listen to these people that have a lot of money on the line that know what they're doing. And if you're starting to listen to people that actually know what they're doing, then you're going to do great and you're going to be up for success. And if you're going to listen to the wrong people, then you're going to be doomed. That's what I had to learn in my life about, investing in the stock market. So slow and steady wins the race. An overnight hit and miss is hard to do. And even if you do it, you got to be careful. And just because you achieved it once doesn't mean you achieve it again. So I did that twice. I hit it with Bitcoin and I cashed out some of it, lost some of the wallet codes, and I did it with some penny stocks. But both of these, one of these, with the stocks, I didn't succeed to win because I just couldn't, force a sale because I thought it's gonna go higher, higher, higher. And then it came down and I said, it's going to come back up. It's going to come back up. And I should have sold and taken profits and I didn't. And that was a life lesson. So don't listen to me when it comes to stock advice, and listen to somebody that does this for a living, not some random ass on YouTube. So this was it for this video. Let me know what you think about all this. And let me know in the comment section how much interest rates are going to go down. And yeah, do you agree? Let me know. If you haven't, follow me on LinkedIn. If you want to shoot me an email about any of it, go to the about section of my profile and then shoot me an email with your with what your thoughts are, articles you want to send me. I appreciate you guys. Thanks for watching, and I'll see you in the next one.